And Gary, live from Barcelona. How are you, buddy?
Excellent. Can you hear me?
Got you now, Gary. So is this a vacation?
Well, I never have a vacation, so
Well, a
I
different
wish.
location,
Yeah, just
different
I got
venue.
three. I have three screens sitting in front of me. Actually, I'm in southern Spain now, near Marbella, and it's 2:30, and well, it's 2:30 here, and ready to work. Simple as that. How do I
Okay, but
share screen?
on the bottom,
Uh,
cursor, green box.
the green box. Uh,
Your cursor on the bottom of the screen. You'll see it. There we
you
go.
got that?
Yep, it's coming up.
Oh,
Okay.
I love
All right.
modern
So
technology.
the bullish dollar, the
Yes.
long dollar position ETF.
Yeah. First off, I want to say that last gentleman, I have no idea what a dragonfly is, but God bless him. He sounds like he knows what the hell he's talking about. So,
Yeah.
boy, oh
Well,
boy.
you've never seen a dragonfly in Chicago. They used to scare me. Okay.
I have no clue, but
Okay.
we all do what we do and all that fun stuff. So you
All right.
ready?
So call it a head and shoulders on this top then, right?
That too. Well, first off, thanks for having me.
Great to have you, Gary.
What I want to do, sometimes there are just such direct correlations in the market that it's all about your eyes. And, I always complain about people that have called the bottom 14 times in the last 6 months. I don't mention them by name, but I'm always amazed to see, and I always tell people in bear markets, you'll not get any help from Wall Street. We've seen downgrades after stocks drop 80, 90%. I just beg to everybody, make sure that's a lesson for you, that there are just two words that matter most when investing, and that is watch price. And I am amazed how simple those two words are, but how the masses just don't watch price. Price gives you so many indicators, so many thoughts about fear and greed and money made and money lost. It's stunning to me. And the great lesson of just since last February, when we started the top in all the bubbles, I remain stunned about how much money's lost in those bubbles, in the high beta growth names that are down 50 to 90%. Just make sure going forward it's a lesson, because if you haven't learned one from this, get out of the market completely, because you have not learned that you need to make sure you have specific sell rules, because you never know. So just wanted to start with that.
Okay. Thank you for the homily.
All right. So,
but it's true. So what are you thinking here? So, we had those lows right around the solstice in the market, and more recently, the dollar looks like it may have put in a top. Do you think a dollar weakness will be embraced by the market? Because they're certainly complaining about it being a drag on earnings.
All I can tell you, the dollar strength has been a big problem for the market. So dollar weakness, maybe that's better. For me, I have a much better direct correlation, at least in my eyes. But I just first want to start with my worries. And this is just me, but I am just a big believer that bear market bottoms, real bottoms, do not have froth and speculation. I've studied every bear market bottom, and pretty much 100% of them, that's a good number, carry with it nothing but doubt, wiping away the speculation and the froth. And I just noticed this while I was in Spain. Hold on one second.
So you think people are euphoric because of this bounce we've had?
Well, let's take a look at HKD, a $7.75 Hong Kong company, and now has a $75 billion market cap. It's gone from 7 and change up to 400. And I'm thinking to myself, wasn't that happening in the middle of the bubble? As things went insane. So this may be nothing, all I am just saying, I'm a big believer in just seeing everything and
Yeah.
keeping things in what I call my file manager. And I
Yeah.
just was saying to myself, what the hell is this?
Yeah.
And I just don't think these things happen at bottoms. And if I go to this weekly on this chart, $75 billion market cap for a company with, it says 24 million in sales and hardly makes money. So just keep that in mind at the outset as I start this. That scares the living heck out of me.
Yeah, that
And
there's
maybe
still
it's
that kind of, well, it's a low floater, so it wouldn't easier to manipulate or what?
whatever it is, doesn't, for me, it's the outcome that matters.
Okay.
And this to
Can't
me,
rationalize it away.
it should not be going on. Bottoms usually take months to get people speculative and frothy and stuff like that. And this is one, it's only one, and there's a few others, but this one is the one that stuck out for me that I wanted to bring up. Here's my other worries, and I'm going to just start with that. Good bear markets usually have three big legs down. And all I know is right now, I think that's one, I think that's two. And where's number three? That's part of it. And also, I'm not the biggest of VIX guys, but besides, I think this is a bad print. If I'm, you know better than me. Look at the VIX.
Yeah, we never had the explosion in VIX.
Yeah.
So that's telling you we didn't, that the decline was orderly or manipulated.
Yeah, I don't know. It's just a worry of mine, and something that you said before about liquidity.
Yeah.
It does go both ways. Look how from Wednesday at 2:30 till the close Friday, that was no liquidity on the upside. So we'll see what happens. I'm just a big believer right now in the 50-day moving average. If you stay above it right here, I'm showing the NASDAQ, good.
Yeah.
If
Yeah.
you get below it, bad.
Okay.
That's the best way to explain it. I believe if we get back below it again, I think that third leg comes, and usually the third leg is not very pretty. And I will tell you up front for the masses, I have one stock in my eyes that if that does occur, they can't, it's not even at Facebook anymore. They can't even rally Meta in a big short covering move of the last few days. I got a sneaking suspicion this has a chance to implode from here if the market, does indeed take the next down. So right now I'm looking at what hasn't rallied, because it's easiest to isolate weakness when the market's strong, and we've had a pretty good rally in here. So just for everybody to keep that one in mind. I wanted to bring that up to you. And my last worry is simplistic, and people that watch me on TV or listen to me know the more people that are running the country are a bunch of morons. They're now coming out with the inflation.
Why don't you just tell us how you really feel here?
Well, you don't need me to tell you. 30 trillion of debt tells you. They're coming out with something called the Inflation Reduction Act that will do nothing for inflation. And they're also telling us it's going to cut deficits. And I asked the question, when is any program from DC cut the deficits? So the con artists are at it again. And then, of course, the Fed. I've been saying now for a couple of months, they really don't matter right now because how far behind they are. They're still playing catch up. And the Fed right now is still below the 3-month Treasury bill. So they're back in the game, but I don't know how much they matter unless they start going to 3.25%, 4% on Fed funds. And then we'll see what that brings. But you already know they've got everything wrong. And I worry about them doing too much. Somebody said in the last interview, central bankers not is a tough job. Yeah,
Oh,
it's
tough
not a
job.
tough, it's not a tough job if they just get the hell out of the way. And they decided to print up to $9 trillion. The lemming in the European Central Bank followed suit and was worse with negative interest rates. They were just celebrating as being tough in Europe, raising rates to 0%, which somewhat boggles the mind. So that's my other worry.
Okay, well then it sounds to me like you would view this rally in S&Ps from about 3,600 to 41 as at the minimum a chance to get out of longs, at a maximum looking for shorting opportunities.
Well, a couple of things. I'm a big believer in the here and now, and so far so good. Leadership, though, is not big. It is picking up a little bit where some things are breaking out. For me, the number one stock as far as beta is Tesla, and it's getting going, so that's decent. But overall, most everything looks like this, and I'll just show it again. 90% of what I scan looks like this. This NASDAQ, like this, or the S&P.
Constructive.
It's constructive. It's coming up finally above the 50-day. And
you think we're going for the 200? Think we're going for the 200?
I think there's a chance. I don't know, but I think there's a chance. My job now, you first gotta deal with this 41.77 here, which you can do very quickly the way it's been going. My job now is to measure the pullbacks, if they're controlled, if volume doesn't explode, if the day's over and I scan, I can't find a boatload of things already breaking down, and they're just maybe doing something like this, that would be something that tells me when we're not in bad shape just yet. Of course,
how about the oil shares? That's been a darling, and I'm looking at crude on major support. If it breaks down, I can't see that being good for oil shares, and I think they bounced last week, but they're not making new highs for the first time in a while.
It doesn't look great. Let me put it that way. You finished at the low Friday. You come in here. I think you draw one hell of a line right here. This is a reversal back on this day, a break below there, and see ya into here. So I don't own any oils right now, but some are better than others and a lot are worse than others. So I'm just not there. And I'm also, I made the call on this day. I thought oil had topped, and I knew it would definitely top right here for now. And then you got all this in commodities. I mean, look what they've done to that. That's copper. Here's probably a little near-term low. Here's corn. I mean, these things have been in pretty good downtrends. After big drops, this is wheat. After this drop, you're getting a little bit of this, so maybe they're bouncing. But for me, overall, in a bearish sense, and I think that's what's helped. And this is where I want to get into my direct correlation. Here's the 10-year. Very simple.
Looks like the dollar.
Pardon?
Looks like UUP.
And you see that little back here in January. That was the day the 10-year started busting out. Within a day, the broad market topped. Simple as that. This right here is June 17th, where I believe that confirmed the top. June 17th was the low, the low on the S&P. To me, that's the direct correlation. This right here, I think got the juices flowing. I said on Saturday in my notes that I believe yields are oversold, that the market's overbought, so we're probably going to pull back, and yields are bouncing up here. That's just short-term stuff that doesn't really change trend. To me, that's the direct correlation that I'm watching like a hawk. Correlations will only last so long, but as long as it stays a correlation, I stay on top of it. So to me, for your audience, really watch this. And you mentioned that the dollar also, I think this is the driving force behind things, and where she stops, don't know. But for me, The big broad, we haven't had that third leg down yet. And
Okay.
in the last week, I've just noticed a hell of a lot of bottom calls, uh, a lot of talk of, well, what we saw in the last week, 70% of the time this happens, 90% of the time that happens. Oh, this happened in 1947, so this has got to go on. For me, back to my two words, watch price. And we'll see what comes of it. I think my best guess, we got some more work to do. I hope that's wrong, because I like people making a hell of a lot of money, and Wall Street is a fully invested long vehicle. But as I stated, you get the stance.
I have the stance. Any view on the miners, silver miners, gold miners? Gold miners have been pretty poor.
I think gold bugs got to be pulling their hair out. Definitely that's dollar related.
Right.
But with inflation and stuff, if somebody told me a year ago that inflation would go to 9%, I would have thought gold would be at a bazillion right now, and
Okay.
gold miners would be insane to the upside. So what's at work here beats the heck out of me. We own the gold miners. We sold that day right here. We did not like how this broke right here, and we are trend followers, as they say. And little did we know, I mean, I can't believe what they've done with them. And
yeah, they're cheap.
The market doesn't have a lot of in-betweens here. When something gets going, it kind of gets going.
Yeah.
And what they did with, and this is important, what they did with Newmont here.
Oh yeah. Is that a bad earnings report or what?
Yeah. Market no likey, as they say.
Okay.
So, overall near term, short term, I think yields bounce, probably get a pullback here. I'll know a lot more on the pullback as far as stocks. That's just short term stuff. More of an intermediate term, as long as the 50-day holds for the major averages, there's opportunity to go higher. If they break, I think look out based on that, a third leg down.
Yeah.
But I'm a day-to-day guy, and as it comes, there's leadership in the market, not a lot. Some weird names. I do want to show this though. Amazon. There's Amazon with the big gap.
Yeah.
But you're dealing with massive overhead on a 20-cent loss. So we'll see what comes of it. Typically with these big names, if this thing puts in a little, pullback or a handle and breaks through, I may look to buy. Apple for me, I'm bringing up these 5 names on purpose. Too extended for me to touch, but once it broke back above, but earnings suck. I mean, down 8 + 2, one of their worst. Here's Google, number 3. Looks like crap, but also it rallied up on a -1%.
Yeah, it cleaned out all the stops and then turned up.
Yeah.
Last week.
Microsoft, once it didn't break those lows, Microsoft breaks above the 50-day on their worst quarter.
Look at the close before it. Look at the day before it gapped up, it was at 250, closed on the low of the day, and then it gaps up. If you were short, you're trapped.
Bingo. And I will tell you this, I had a little QQQ position. I sold, we had bought like in here, I sold like in the middle of the day here, because I said, well, all these big guys are coming out and things look like they started to break down again. And then they gapped everything up. I lost a little bit, no big deal. And the 5th one is Tesla. And here's earnings day with the good move. And then last week, and that's what I meant by Tesla being, the beta. When it gets going, those 5 names are 41% of the NASDAQ 100. So I'm thinking to myself, man, you got 4 with crappy earnings. What's going on here? I just wonder if a lot of parking is going on in the biggest of big, just in case. and we'll find out, because I do believe, and I called this very well. This whole thing here with Apple, I said that was parking the hell out of money, de-risking, and
Yeah.
just get into Apple. 16 billion shares traded every day.
Amazon at the highs too. They were calling them flight to quality stocks up
Yeah,
there.
imagine technology flight to quality.
Yeah, I know. That's
Yeah,
great.
you know what I think of that.
Yeah.
So you got the overall, and there are some good names out there. Good leadership, things moving out, good reaction to earnings. But I've said for 5-6 months, anything breaking out, don't buy. And 99 out of 100 of them failed. So some things that have been working, just nothing spectacular, as they say. So I really haven't done much. And see H&R Block, I'm not buying a company with 0% earnings and 4% sales, but man, pretty good. And things like those are the things that are working. Here's a McKesson with a great chart, but they report this week. By the way, 1,000 companies report this week, so I'm being very careful. I like charts and Service Corp. They report tomorrow. Cemeteries, but nothing what I call BAFO. I think it's just going to take a long time. Most everything kind of sort of looks like this in growth land. By the way, this is a good one. This is a strong name versus other names that are even lower than that. So we'll see.
That's a breed.
Yeah, I am not bearish this second as long as we stay above the 50-day. I am not, even with the last 2.5 days, I am not bullish. I think there's a lot more to work out. And if we go higher, and if we've seen the bottom of the bear market, I think there's going to be a lot of time, a lot of backing and filling because of all the damage done. And if you go back to 87, after we cracked, this is what the market did for the next year. It just takes a hell of a lot of time. So
takes time to recover from auto wreck.
Yeah, the more damage done, the longer it takes. But what I will be looking for is LA Gears out of 87. LA Gear was breaking out before the crash, crashed with the market. It was the first one to really turn up in earnest with volume, made a right turn for a couple of weeks, went back to the highs, and then went up 17-fold in 15 months because their earnings exploded. So right now, I'm in the midst on the fundamental side. Yes, we do that. What companies got 100%, 200% earnings, big sales growth, and are just bucking the downside? Not many, and I don't see enough to even discuss right now. I do know about the CELH, but this morning they did a deal with Pepsi. It's up another $8. It's a drink company. It's faddish, so I'm careful about it. So
okay, Gary.
So
I'll tell you the theme. And speaking of good names, Gary Kaltbaum, that's a good name, and still skeptical that there could be one more wave down. 50-day moving averages are important support on many key issues. Correct?
Yep, and watch yields. I was always a big Fed watcher for obvious reasons because they were printing their minds out. But I'm just watching the 10-year yield right now. If it moves back up in earnest, market's going to get in trouble. If it keeps going lower, I think it helps. As I said, it's very oversold right here, so it's going to bounce. I think that's what you're seeing pre-market right here. But if it gets going again, look out. Market's not going to be able to take it. And why? We have a very leveraged economy. We have a very leveraged consumer. And I'll just draw two lines. This is the savings rate for consumer. This is credit card usage. So I don't think an economy can take higher rates, or if oil starts really starting to go again to the upside also.
It's breaking down today.
That is actually good news for the consumer at the pump.
Right.
The question is, with the yield curve, I believe inverted now, is it telling you we're headed deeper in recession? And if that's the case, could get even more interesting for earnings, and the earnings really do drive a lot of this. So
Okay, best place for people to follow you on Twitter at Gary Kaltbaum.
yes, and GaryK.com. We have our service. We manage money for a living. We have a service where we do a webcast every night now, and we don't tell you things. We show you what we tell. And we just to give you a note, we stayed out of the bear market, both with our money, clients' money, and the people that follow us, because we just follow a simple roadmap. And here is the roadmap to finish this. Forward breaks. Here's your bear market. Here's your potential bull market. The 50-day caps every rally in bear markets. That's how it works. That's been going on since the day the market opened. And whether now that you trade so much or whether you never traded back then because of how small the market was, this is the definition of a bear. It's classic looking. Not everyone looks that way, but I show forward because to me, this one is the example. It has no chance of coming out of a bear market until it breaks back above and goes through the process. And usually the process is the 50-day will flatten out. Let me just do this real quick. It'll flatten out. Come on, little guy. Like this. This is not working, damn it. Hold on. Flatten out. And then if things turn up, it starts going this way and price will pull back. And then you get the stair steps up above it instead of what you're seeing here. That is bull versus bear. And that is what we have our magnifying glass on every day to tell us what to be in, what to be out, and whether to be out. And that's how we stayed out of the market. It was actually pretty simple because the market really never gave any type of thought process that it wanted to turn up. I can tell you in the bear, we bought here and sold here. I think we bought here and sold here. And we just bought in here and we're still in right now. And praying.
Okay, Gary.
Let's put it that way. So there you go.
All right, Gary. Thank you. Enjoy the rest of your working vacation on the beach in Spain. Thanks for taking time out of the day to, talk to us while you're overseas. Appreciate it.
And I always appreciate the opportunity that you guys have me and put trust in me. And I do thank you for that.
All right, Gary Kaltbaum, everyone, at Gary Kaltbaum on Twitter. Thank you, everybody. You could join the team in 14 minutes for the morning edge. Don't just count your stocks, count your blessings. See you guys for Turnaround Tuesday. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.